John, I think their target was like 60 to 90 million subs over 3 to 5 years. Correct me if I'm wrong. They hit that mark pretty quickly. I mean, a lot of that, of course, having to do with the pandemic as well. But how impressed are you by those Disney Plus numbers?
Yeah, Disney Plus is fantastic. Like you said, 60 to 90 million by 2024. They did 74 million in the first year. So yeah, that has been one of the bright spots for sure. And frankly, not just at Disney, in the whole streaming universe, I think that it beat everybody's numbers.
Is it making any money though?
I would say it's losing less money than we expected. Now that said, one thing I think the management made clear is that the investments have just begun. I mean, this platform is going to be a global phenomenon. It is already a global phenomenon, but to take it to the next level, there's going to be an increase in investment. You're going to see a lot more content on this platform.
Yeah, it's you're going to lose money in every subscriber, but don't worry, you'll make it up in volume. Listen, here's the good news and bad news as I see it for Disney, John. The good news is they got a lot of subscribers. They're highly touting their one big program, The Mandalorian, the second season coming out, but I would imagine, aside from their old catalog, they don't have a lot of new offerings because you haven't been able to film anything new since March. Where do you think the sort of the lineup is going to be in the next 3 to 6 months? Because consumers care. They'll drop you like that nowadays.
That's right. There's very low switching costs to these new platforms. It's unlike cable where, it's a very sticky product. You have a professional installation. With these D2C platforms. You can turn them on, turn them off, almost on a daily basis, right? So you're right, and I do think the growth in Disney Plus did slow a bit in the quarter, and I do think that that's a function of the programming, the content creation hiatus we saw from the pandemic. That is still an issue, and you're right. Over the next 3 to 6 months, especially as the new market launches slow, you could see the growth of the product slow even further.
Yeah, listen, to be fair, we like to focus on Disney Plus. It's new, it's sexy, it's the bright, shiny thing, but it's not really material to the company right now. I mean, ESPN and the theme parks, they are material. Theme parks, all the lockdowns, the CEO slamming the governor of California really for sort of these new restrictions as well. ESPN's been struggling with layoffs the last couple of weeks. How are ESPN and the theme parks doing, John?
Great question. So theme parks actually did a little bit better than we thought. I mean, revenues were down like 60%. We thought they'd be down 70. They were down 85. So there were more people in the parks than we expected. But the real story there is on the cost side, as you heard with all the layoffs. They're being very aggressive in managing that side of the business. So the losses were quite a bit better than we thought. We were looking for closer to $2 billion. It was only about $1 billion in losses. And ESPN was actually a bright spot. Their media net business actually grew operating income on a year-over-year basis. And that is really a function of the return of sports. While sports ratings weren't as good as we thought, there were a lot of them. So advertising at ESPN was up over 20%. It's going to be up again this quarter, but a lot of it has to do with the shift in the schedule.
Shepard Smith here. Thanks for watching CNBC on YouTube.